Hi again, welcome back to the Perfect Storm Market Timing YouTube channel. In today's video, we're going to take a look at our Excel indicator and the rainbow indicator and see how we can identify trend and sync up some trades. We're going to take a look at four charts from last week. We're going to look at the 27th, 28th, 29th, and 30th of October. Here you can see the Excel indicator on the bottom of the chart. This is built into Ninja. And then you see the price action at the top of the chart. If you recall from watching the prior videos, the green line, blue line, and gray line give us trend indication. The primary and dominant line is the green line. It gives us the bigger picture trend and area of tops and bottoms. The blue line is the secondary trend, and sometimes the price action will deviate and go to the blue line. And then the gray line is our fast line. It gives us indications for entry and exit at the peaks and valley points where the line spikes to highs and lows. So what I want to show you here is the primary trend indicator. You can see on the green line at the bottom here where we have the tops and bottom areas marked out. And what happens is the green line steps up and down. These are areas where tops and bottoms are going to come in. So you can see we're at the area of the top here where the green line is at its peak, and then it starts to step down. It takes two steps down to this bottom area before it steps up again. So in this area, we expect a price action bottom like we get here, and you can see on the text tag on the screenshot. So once we make this bottom here, we get this double bottom in our bottoming area on the green line. And we expect as this green line steps up, we're going to get a top in the next area. Now we've got a little bit of a cross current because the blue line has peaked and is headed down, but the green line is dominant and will be the dominant factor most of the time. So as you can see, the price action heads up. We make a top in the area where we expect, and then we expect to step down again. Now the price action follows the green line step down into the bottom area. You can see that the blue line is transitioning down and is below zero at this point also. With the indicators below zero, it does indicate downward pressure, and just the opposite when the indicators are above the zero line, it indicates pressure for the top. So you can see as we step down into the bottom area, we make another double bottom over here between the 10 and 12 o'clock hour. And then we're stepping back up and we get a double top in what's actually an area of a triple top, but we get a high in the section where we expect to get one. And then we step down again. So we expect to get a bottom in this area here. And you can see the price action does follow and give us a bottom. Now, as the green line steps up, we do expect to get a bottom here late in the afternoon, early evening, and the market should start to track up again in that area. Okay, notice I switched charts, but I just want to show you the rainbow indicator in tandem with the Excel indicator. And in the Excel indicator, you can see on the upper left of my screenshot, we're in that area where we expect a top to form. And what happens in that area, we get an RG3 trade setup right at the high, which gives us a good short opportunity. And we run that down to our three potential mechanical exit points, which these points can also be used as add-on positions if they end up becoming swing highs. Then we get to the second top area. In that top area, we get another trade set up for a short. We get an R4 trade. And what happens a lot of times, the R4 trade will run to the next R4. And you can see we get a straight move down into the next R4 trade area. And the R4 just means that of the 6 ribbons in the rainbow, 4 of those are going to be red. And those are very reliable setups. You can see here we triggered on the area where we got the 4 reds on the rainbow, and this trade, the short ends on the next 4 segments of the rainbow. Then we get another short indication over here. And that's an RG3 trade setup, which gives us a nice short late in the afternoon. All right, let's move it along and get to the chart for the 28th. On the next days of charts, I'm just going to show you the screenshot that shows the Excel on top and the rainbow on bottom. It's a little bit far away, but you can kind of see what's going on with it anyway. You can see the trend indication on the green line where we go top, bottom, and that green line steps up and down. It does follow the trend. We're moving down on the green line. We make a little spike low where the bottom comes in with the blue line here, and then we are trending back up, and the blue line's trending back up. But with the green line being below zero still, the dominant trend is still down. So we make a minor high, and then the green line tracks down from there. We're expecting a low sometime after 4 p.m. and then another move up. And you can see the low comes in this area, the bottom, and the market's already started to track up. But again, we can use these areas in this trend indication to use our triggers on the rainbow indicator. So you can see we get a short triggered here, and then we get another short triggered here. Another very next day, same thing. We've got an R4 trade setup. We short right down into the next R4 zone area. And that's been reliable and working every day. Here's the chart of the 29th. You can see that the green line is slowly stepping up in negative territory, and the blue line is trending down and crossing zero and goes negative. In this particular case, the blue line is dominating, but it's doing that because the green line is below the -15 level in that area, and those are negative aspect points. So what happens when we get into the area of the bottom, the green line is stepping up, moving into the zero area. The blue line steps up, and the bottom comes in the area where the blue line starts to step up, and now both of the lines are coming together into sync. The green line is stepping up, the blue line is going sideways and then stepping up, but the market reverses and the trend becomes long until the blue line peaks out in the area marked here by the red box. You can see the 3 arrows here are spikes to the high side on the gray line, which indicates areas that should be highs in the market and potential short opportunities. And you can see the corresponding arrows on the price chart come in at 3 highs and set you up for this move down. On the price chart, you can see we've got an RG3 short. We've got an R4 at the low, which signals a long. And then we go along, and then we get the next R4 signal. With the market coming down, it indicates that we can also take long at that point, and that gives us this moonshot to the upside. Here's the chart for the 30th. Again, you can follow the trend. The green line, step up, step down, step up, stepping down. Even these little bumps that look insignificant are significant, because what that is showing that we are still continuing to step down from this area of the top. We step down, we run along, we step down again, and then we step down at the end of where the bottom text box is. You can see the green line gradually stepping up and crossing back over the zero line. During this area, the blue line is flat, so the green line will be somewhat dominant. You can see the price action follows pretty closely to our trend indication and gives us areas of highs and lows and areas where we can identify what is the dominant trend in that little period of time, and we can then use the indicator on the rainbow or the gray line spikes to get in and out of trades. You can see in the area of the bottom here, we are set up again with the RG3 trade, which gives us a really nice long worth quite a few points. And then we get to the area of the top, the market tops out, we start down, and then we get a higher high, which is going to happen sometime, but we get a great short setup over here triggered by another RG3 trade, which then sets the market down. Excuse me, the short setup is an R4 trade. You can see the 4 red boxes on the rainbow indicator. And then we have these red vertical lines indicate potential exit points. So you can see any one of those three areas gets you out with a really nice profit on those trades. Anyhow, that's it for this week's video. Stay tuned. We'll update every week, and it won't be long before the Perfect Storm trading room will be open. You'll be able to join, sign up for a membership, and you'll be able to take part in these trades with us. So thanks for watching. We'll be back again next week.